Good afternoon, everybody. My name is Tony Lajeunesse, President and CEO of TL Financial Group. Thank you so much for attending our webinar today. We're going to review some really important federal stimulus actions that are mostly related to the CARES Act. And these are going to be things that you need to know. There's going to be a lot of things that you need to know regarding these details. This presentation is a little over an hour long. For some of you, there's aspects of this presentation that are going to apply to people in different categories. So just be patient with the material because we're going to be reviewing about 13 different federal stimulus actions, some that may not apply to you, but some that will. So just be patient as we kind of go through this information because there is quite a bit. You should have received an email that was going to give you the outline for today's presentation, along with some really helpful fact sheets. And as always, if you have any questions for us, please feel free to reach out to us. We are available for you. So before I begin, I want to remind everybody that today's webinar does have everyone on mute. Again, if you have questions, just reach out to myself, Michelle, or Aaron, and we will reply to you promptly. There will be a recording of today's webinar, and it'll be emailed to all of our clients and those that have registered. The replay will also be posted on our website and our Facebook page at TL Financial Group. So if you haven't already, please visit our page to follow us. Also, please feel free to share the replay with a colleague, friend, or family member that you feel that could benefit from this information. All right, let's begin. There are 13 federal stimulus actions that may help you, your family, and or your business. So let's first review on how we got here. Obviously, in a nutshell, we're here because of a highly infectious virus that is spreading around the world. It's starting to slow down, which is good. Governments have ordered protective lockdowns and curtailed movement. Societies have retreated indoors. The global health crisis has created global and financial crisis. Now nations and states are struggling with the new normal. So let's take a look at some of the impacts. The pandemic has triggered a global economic slowdown. These impacts include half of all workers worldwide facing job losses, travel restrictions in over 100 countries, global supply chains are disrupted, GDP forecasts are down, stock markets are volatile, and oil prices have collapsed. And historic recessions predicted for advanced economies are happening all over the world. Here at home, we're not protected from all of these trends. And you can see here, severe shrinking of the economy, record jobless claims, less than 1/3 can work actually from home, retail sales have crashed, state and local tax revenue is going to be way off, market volatility continues, and it was confirmed yesterday that the recession did start in February. So to sum up our situation in one quote, here's what the top economist from the International Monetary Fund says. It's very likely that this year, the global economy will experience its worst recession since the Great Depression. So that begs the question, what to do? So governments are responding with stimulus spending programs to support workers, families, and businesses, and the amount is unprecedented. This obviously applies to the United States as well. So there have been 4 main relief and stimulus packages so far. First, you got the Families First Coronavirus Relief Act, known as the FFCRA. Second, the IRS announces Notice 2020-18, providing tax relief. Thirdly, Coronavirus Aid Relief and Economic Security, called the CARES Act. And then the CARES Act, the CARES 2 Act, that came out on April 23rd, 2020. Now, we're going to discuss the highlights of each of these initiatives in order. So we're going to cover such things as whether you should ask your creditor about debt forgiveness or deferred interest. We're going to be covering whether or not you should consider a required minimum distribution holiday in 2020. Also consider a penalty-free withdrawal from a qualified retirement plan or IRA. And then consider having your business take out a low interest and possibly forgivable loan, which many businesses have already done and are in the process of, and then possibly consider deferring payroll costs. These are just to name a few. So let's go ahead and get started. And so we face this challenge, how to steer ourselves, our families, and our businesses through this unprecedented health and economic crisis. And our goal of this presentation is to help you learn about federal stimulus actions so you can try to maximize your personal and business finances and plan for how best to weather this storm. So let's take a look at the key relevant topics, starting with first, the free coronavirus testing. The first piece of legislation to be passed provides free coronavirus testing to all Americans via government programs or insurance. For this, all co-payments are waived, and there is a 6.2% increase in Medicaid payments to states on a temporary basis. Secondly, there is food aid, and that has been expanded. The FFRCA provides $1 billion for food to individuals without food security. You can see some of the program allocations here. One trend we're all seeing is a surging food bank crisis. Millions flooding the system that have never intended for a nationwide crisis. So if you have the option, consider helping if you can. Thirdly, paid sick and family leave. The CARES Act also requires most employers to provide employees with paid sick leave or expanded medical or family leave. While these provisions change quite a bit based on an employer's size and type of organization, it generally requires employees to provide payment if an employee can't work because they're quarantined or sick, or if they need to care for someone who is quarantined or sick. So here's how it breaks down. 2 weeks, up to 80 hours of paid sick leave at the employee's regular rate of pay if the employee can't work because of required quarantine or symptoms or diagnosis of COVID-19. And then there's 2 weeks of paid sick leave at 2/3 the employee's regular rate of pay if the employee can't work because they need to care for an individual subject to quarantine, or they need to care for a child whose school or child care provider is closed. And then 10 weeks of additional paid expanded family leave and medical leave at 2/3 the employee's regular rate of pay, where an employee is unable to work due to caring for a child whose school or child care provider is closed. And it can be unpaid leave for the first 10 days, and then paid leave kicks in. After 10 days away from work, employees will receive 2/3 of their regular salary while on their family leave, and paid leave cannot exceed $200 per day and $10,000 total for the full 10 weeks if the qualified sick leave is for reasons other than being sick or quarantine. Now, this only applies to businesses with less than 500 employees. Employers will receive tax credits for providing this paid leave to its employees. Now, the paid sick leave and expanded family and medical leave provisions of the FFCRA apply to certain public employers and private employers with fewer than 500 employees. Most employees of the federal government are covered by Title II of the Family and Medical Leave Act, which was not amended by this act, and are therefore not covered by the expanded family and medical leave provisions of the FFCRA. However, federal employees covered by Title II of the Family and Medical Leave Act are covered by the paid sick leave provision. Small businesses with fewer than 50 employees may qualify for exemption from the requirement to provide leave due to school closings or childcare unavailability if the leave requirements would jeopardize the viability of the business as a going concern. Eligible employees, all employees of covered employers are eligible for 2 weeks of paid sick time for specified reasons related to COVID-19. Employees employed for at least 30 days are eligible for up to an additional 10 weeks of paid family leave to care for a child under certain circumstances related to COVID-19. Please notice though, where leave is foreseeable An employee should provide notice of leave to the employer as soon as it is practical. After the first workday of paid sick time, an employer may require employees to follow reasonable notice procedures in order to continue receiving paid sick time. Now, certain self-employed individuals may also take advantage of the extended leave as well and the tax credits. So the sick leave credit compensates self-employed people for up to 10 days away from their business. Family leave covers up to 50 days away from work. There are limits on these credits based on self-employment income, but be aware of your options. So financial planning opportunities. Make sure you review your eligibility to receive paid sick and family leave. Are you a business owner? Review how these benefits will affect your workers and your obligations. And lastly, are you self-employed? You may be newly eligible for 2 refundable credits associated with sick and family leave. Okay, that now brings us on to number 4, unemployment benefits. The $1 billion in unemployment from the FFCRA will be distributed to states in accordance with their level of unemployment, where states with higher unemployment will receive a higher level of aid. So there's an additional 13 weeks of unemployment that will be in addition to the length of unemployment currently offered by the state in which you are claiming. The additional $600 does not change the state benefits. The Act created a temporary program for those who do not typically qualify for unemployment, which is called the Pandemic Unemployment Assistance. And states usually implement a waiting period and do not make benefit payments the first week unemployment is claimed. The CARES Act waives that waiting period to get to the money to the people faster. To help states with the costs, the federal government will be reimbursing those states for the costs associated with that first week of payments. Now again, while the CARES Act has expanded the categories for which an unemployed or partially unemployed individual may qualify to receive these enhanced unemployment benefits, all of the categories are predicated on the fact that the individual is not able to work or telework and is not receiving other paid sick leave or other paid leave benefits. So keep a tight eye on that if that applies to you. The CARES Act extends coverage to employees who are self-employed, seeking part-time employment, or do not have sufficient work history or otherwise might not have qualified for regular unemployment under the state or federal law, but who became unemployed or cannot find work due to COVID-19. In that regard, the Act also extends coverage to independent contractors. Furthermore, whereas an individual generally must demonstrate that he or she is actively seeking work in order to receive or continue to receive those unemployment benefits, under most state law requirements, the CARES Act does not require it. Now, self-employed individuals and contractors who normally don't qualify will have up to 39 weeks of unemployment benefits under the Act. The CARES Act also expands the reasons for which an employee may become eligible to receive unemployment benefits due to COVID-19. The Act provides additional funds to states that permit individuals to receive unemployment benefits where an individual is unemployed, partially unemployed, unable to work because any of these following coronavirus-related reasons, okay? And there's a handful here. The individual has been diagnosed with COVID-19 or is experiencing symptoms of COVID-19 and is seeking medical diagnosis. A member of the individual's household has been diagnosed with COVID-19. The individual is providing care for a family or household member who has been diagnosed with COVID. The individual is the primary caregiver for a child or other person in the household who is unable to attend school or another care facility due to COVID-19, and the individual requires such school or care arrangement to be able to work. Also, the individual cannot work because of a quarantine imposed as a direct result of COVID-19. That would apply. The individual cannot work because a healthcare provider has advised the individual to self-quarantine due to COVID-19 concerns. The individual was scheduled to begin employment and either does not have a job or cannot commence employment with the new job as a direct result of COVID-19. The individual has become the breadwinner or major support for the household because the head of household has died as a direct result of COVID-19. The individual has been forced to resign from employment as a result of COVID-19. And lastly, the individual's place of employment has closed as a direct result of COVID-19. There's probably about 7 individuals I know personally that have been impacted by these bullet points that I just read to you that would apply for that benefit. So I'd imagine there's many people out there that would need that type of assistance. Okay, so let me give you an example really of how this benefit works, all right? The numbers are going to differ by state. So assuming someone claims unemployment under these new rules on April the 1st, we're going to estimate 18 weeks from April 1st to July 31st, assuming you collect unemployment those first and last partial weeks. So collecting $1,313 a week is for the first 18 weeks. Then collecting $713 a week for the next 8 weeks. That brings us to a total of 26 weeks. And then, of course, collecting that extra $600 a week for the additional 13 weeks. I recently talked to a store owner whose employees have been infected, not infected, but have been affected by their store closing down, and he wants to bring them back to work. But they won't come back to work. Many of them won't because they're receiving more money on getting unemployment than they would working. So that's always an issue when providing this type of benefit, getting workers back to the workforce. Now, here are some financial planning opportunities. Apply for unemployment benefits as soon as possible. Self-employed should apply for unemployment benefits because you may qualify. Review your eligibility for unemployment under the new rules, and then review your household budget and financial plan considering income reduction. So it really just comes down to is where can you cut costs so you can be as efficient as possible moving forward. Because a lot of these benefits are going to run out at the end of July, unless the government plans another stimulus bill, which they may very well do. Okay, that brings us now to item number 5, filing and paying taxes. What has changed here? Now, the IRS enacted Notice 2020-18 to extend the filing and payment deadline from April 15th to July 15th. Many of you have probably already filed for this year, but this deadline applies to all tax-paying entities who have a tax return or payment due on April 15th, 2020, which includes individuals, businesses, trusts, estates, partnerships, associations, company, or corporations. So if you file an extension, the extension date remains the same, which is October the 15th. Remember that the extension only applies to federal taxes. However, Michigan has followed the federal extension to July 15th, okay? This extension applies to both the filing and the payment deadlines. The extension is for 2019 tax return and first quarter estimated income tax payments for 2020, originally due April 15th, 2020. There is no limit to the amount of taxes owed that can be postponed. And take note that IRA and HSA funding deadlines have also been postponed until July 15th, which is pretty nice. Calculations of interest or penalties as a result of failing to file will disregard the 3-month period between April 15th and July 15th. So accrual tax filing and payments will begin July 16th, 2020. And you can visit irs.gov/coronavirus for the most up-to-date information from the IRS. That's irs.gov/coronavirus. Financial planning opportunities here. You should speak with your tax preparer regarding how the extension may or may not apply to you. Confirm whether your state is following the federal and offering similar relief. Revisit amounts for 2020 quarterly estimated payments if that applies to you. It does reduced income in 2020 reduce those estimations for you. And then consider the new deadlines when planning contributions to retirement accounts, including your IRAs, 401ks, and HSAs. Okay, that leads us now to item number 6, stimulus checks for individuals, couples, and children. At this point, you've probably heard that the government is sending $1,200 checks to individuals, $2,400 to married couples, an additional $500 for every child under 17. And you're likely also wondering if you'll get such a check, and if so, how much, if you haven't received a check already. Many of you, I'm sure, have already received a check. But payments are based, this is how it works. Payments are based on your 2020 adjusted gross income, but they will be paid based on your 2018 and your 2019 tax return or Social Security filings, really depending on if you filed your taxes for 2019 yet. So the payment will be reconciled for all others when you file your 2020 tax return. The IRS has created a website to enter your information if you haven't filed your taxes in the past few years, and if you're not receiving Social Security. So you can go to the irs.gov/coronavirus/get my payment. You can visit that to see if you qualify. So like most taxes in the US, the cash payments follow a progressive system where individuals and couples earning more receive less. The income thresholds for this begin at $75,000 for an individual and $150,000 for a married couple. Interestingly, if you earn over those amounts, the money doesn't just disappear, it's merely reduced by $5 for every $100 you earn over your respective threshold. So are you a married couple with no children making $180,000? Your payment will be $900 instead of $2,400. Are you an individual with no children making $76,000 per year? Your payment will be $1,150 instead of the $1,200. Financial planning opportunities here. You should confirm that you are eligible for a stimulus check. If not, what actions can you take? Evaluate your cash flow and expenses. What is a good use of that money? And do you need the stimulus check? Maybe consider putting it towards a charitable donation or funding your IRA or Roth IRA with that money if it's not needed. Let's take a look at number 7 regarding mortgage, rent, foreclosure, and eviction relief. What should you do if you need to pay your mortgage or your interest obligations but lost your job or otherwise can't pay? Reach out to your debt holder, credit card company, or lender and ask if they have any options for people in your situation. They likely have options because no company wants to be portrayed by the media as the new big banks from 2008. They don't want to be seen evicting people from their houses or otherwise hurting people who have already been hurt by the virus. Many credit card companies are offering forgiveness, and many mortgage companies are foregoing interest. Fannie Mae and Freddie Mac are also suspended foreclosures and evictions for 60 days as of March 18th. So if necessary, research whether this applies to you or not. Now, the Department of Housing and Urban Development directed companies that service government-insured mortgages loans to give late borrowers the option to defer payments for up to a year. The CARES Act specified 6 months, but that relief was extended soon after as the economic damage of COVID-19 became even clearer. So they have these payment holidays, and it's just a way to say basically forbearance, okay? Just like with work holidays, the work doesn't stop coming, and when you get back to the office, you can be sure to be inundated with emails and extra work. The same may be true for your loans, so think before you decide to suspend. I'm going to give you an example here in just a minute. This relief applies for mortgage loans owned by Fannie Mae and Freddie Mac, the Department of Veterans Affairs, Department of Agricultural, and the Federal Housing Administration. Many banks and lenders not included in the CARES Act are offering mortgage relief. So if you believe you will not be able to make payments now or in the future, contact your lender as soon as possible. Financial institutions are inundated with calls, and you may not be able to reach your lender immediately. Now, the required payments on your mortgage are not, just going away, poof, they're gone. You'll have to make up those amounts in the future, and how those payments will be made up are not well defined yet in the Act, and even less so for institutions offering relief outside of the CARES Act rules, okay? So interest is going to accrue during the forbearance period and will be added to your outstanding balance. This alone will cause a rise in your monthly payment amount once payments resume. Some lenders have terms in agreements that require the borrower to fully repay missed payments at the end of the forbearance period. So it is unlikely that an individual in a situation where a suspension is needed will be able to meet those terms, so be careful to avoid those. Other lenders are asking for full repayment within a year of payments restarting, which may also be a difficult financial obligation to meet, as there is a significant amount of uncertainty regarding an economic recovery. Missed payments may be simply added onto the term of your loan. That is, you'll be making 6 payments past the final date that was originally agreed upon. So if a borrower suspends for 6 months on a loan that would be paid down by March of 2024, the borrower will have to continue monthly payments until September 2024 under this repayment method. The last option is that the balance of these payments will be added to your outstanding balance. That is to say that the payment length of the loan isn't going to be changed, and payment amounts will be recalibrated to make up for the missed payments. Individuals with less time left on their repayment would see a greater rise in their monthly payment amount under this method than those with more time left. So here's an example. A borrower suspends payments totaling $9,000, okay, $1,500 a month. If that borrower has 6 months left on the loan during repayment, their monthly payments are going to be doubled. If that borrower has 3 years left, then each payment will go up by $250 for total payments of $1,750. If that borrower has 15 years left, then each payment will increase by only $50 for the total monthly amount of $1,550. So there are options to reduce monthly payments instead of complete suspension if you can partially meet the debt obligation. You may also be able to switch from capital and interest repayment to an interest-only mortgage for an agreed-upon amount of time. Speak to your lender and make sure you get the details on how the repayment might work if you suspend or partially suspend, so you know what you're getting into and you're not caught off guard. Okay, super, super important there. Now, how will renters find relief? The Federal Housing Finance Agency, FHFA, said that Fannie Mae and Freddie Mac will offer multifamily property owners mortgage forbearance with the condition that they suspend all evictions for renters unable to pay rent due to the impact of the coronavirus. The eviction suspensions are in place for the entire duration of time that a property owner remains in forbearance. Many states have enacted their own options on evictions. So if you need help, check with your state's laws and your landlord. Financial planning opportunities here. So check to see if you're eligible for an eviction, either under the federal relief programs or state level programs. Do you have a federally held mortgage? Check to see what your options for mortgage forbearance are. Review any mortgage forbearance agreement carefully. Make sure you read it really, really carefully with a financial advisor to avoid unimaginable burdens in the future. You've got to be really careful about that. And are you a renter? Speak with your landlord about how they are assisting tenants who are having difficulty making rent payments. Also check to see if your state is providing relief to renters. And then of course, consider refinancing loans at lower current interest rates if that is going to apply to you. All right, let's move on to student loan payment. How is this working? On a similar topic, federal student loans are being affected by the CARES Act. The Act suspends required federal student loan payments through September 30th, 2020. Again, no one wants to be seen hurting vulnerable citizens. This suspends required payments on federal student loans, direct loans, and FFEL loans through September 30th, 2020. If you don't want an administrative forbearance and want to continue making payments, contact your loan servicer to opt out, and your auto debit payments will resume. Because what happens is, if you're on auto payment, your lender automatically suspended your payments. So you have to contact them to say, no, I don't want it suspended. Please continue taking the payment. If you do delay those payments during that time, no interest will be accrued on that debt. So all borrowers with eligible federal student loans will automatically have their interest rates set to 0. This period of time will continue to count towards any loan forgiveness program, such as the Public Service Loan Forgiveness Program or income-driven payment programs. These loan benefits don't cover two types of federal student loans: older FFEL loans held by commercial lenders, and campus-based Perkins loans or any private loans. Important notes on student loans. So make sure you know your options when you're seeking debt relief. There is a 60-day period, may be extended by the Department of Education depending on how the virus situation is going to develop. Be in contact with your loan servicer, and employers may provide a student loan repayment benefit to employees on a tax-free basis. So under the provision, an employer may contribute up to $5,250 annually towards an employee's student loans, and such payment would be excluded from the employee's income. So call your debt holder, give them advance notice that you won't be able to make your payment. This may help you negotiate a better deal and or may not hurt your credit rating as much. So student loan forgiveness is available. You can see the number there, 1-800-4FED-AID. Financial planning opportunities here. Check to see if payments on your student loans will be automatically suspended. Consider your budget, both with and without payments. Can you take advantage of this interest-free period to make payments? If you want to continue to make payments during this period, contact your lender to opt out of the payment suspension program. And then, of course, determine if your employer is contributing up to $5,250 tax-free towards your student loan balance. Okay, this now brings us to number 9, and this is called new charitable giving incentives. So even if you don't itemize your taxes, because a lot of people don't itemize now because, you know, the standard deduction has been raised so high, there is now, though, a $300 above the line deduction of cash contributions to charitable organizations for 2020. And individuals have no adjusted gross income limit on charitable contributions in 2020. So what does this mean for you? If you have an adjusted gross income of $100,000, you could donate $10,000 and deduct it, lowering your AGI to $90,000. If you have an AGI of $100,000, you could donate $100,000 and deduct it, essentially clearing out your AGI. This is a fairly rare strategy, but it may be viable for you if you sold a business or had another large taxable event occur in 2020. Deductions on cash gifts were previously limited to 60% of adjusted gross income. Now, this temporary deduction exception does not apply to cash donations to donor advised funds, as these remain limited to the 60% AGI. So private foundations and supporting organizations are also excluded from this temporary act. Financial planning opportunities here. Do you take the standard deduction when filing taxes? In 2020, you have an opportunity for a $300 above the line deduction for charitable donations. Secondly, do you want to donate above 50% of your AGI? In 2020, filers can deduct up to 100% of their AGI in charitable donations when they itemize. And are you getting a stimulus check that you don't need? Maybe consider donating it to a charitable organization and taking the deduction instead. Number 10, with 3 more to go after this, here is the IRA required minimum distribution holiday. Okay, now the government typically requires people to take what's called required minimum distributions, also known as your RMDs, every year from their 401k or other accounts, even if the person doesn't want to take the money. These distributions are largely intended to increase government tax revenue, as you have to pay income taxes on them, and they're calculated based on the account values for 2019. Now, the CARES Act allows you to not take your RMD this year, so you don't have to lose money by drawing money from an account that might have been down as much as 30% from last year. So if you don't need your RMD, consider not taking it this year. Many of our clients have either decided to defer the RMD or actually only take a partial amount to cover taxes or their income, whatever it might be. So if you have that situation, please contact us, and we'd love to share with you how it may apply to your situation. The RMD holiday also applies to beneficiary and inherited IRAs. So if you're under 72 and you have to take those RMDs because you have an inherited IRA, you can suspend that payment for this year as well. So some financial planning opportunities here. Consider suspending all RMDs in 2020 if you don't need the income. Do you have a beneficiary IRA? Maybe consider suspending the RMD on your beneficiary IRA as well. Did you take the RMD and you didn't have to earlier this year? Check to see if you're eligible to roll over the amount back into your retirement account. Is now a good time to do a partial or full Roth conversions on large traditional IRA balances? Reach out to us if that applies to you. We're looking at that for a lot of our clients this year. If you decide to take RMDs anyway, consider waiting for later in the year when the market may be recovering a little bit better than what we see right now. Okay, number 11, penalty-free withdrawal from IRAs and retirement plans. Now, usually there's a 10% penalty for early withdrawals from retirement accounts, but that is gone for withdrawals of up to $100,000 if made on or after January 1st, 2020, if it is a coronavirus-related distribution. So the law also exempts the distribution from the mandatory 20% withholding that's applicable to eligible rollover distributions, allowing the individual to include income attributable to the distribution over a 3-year period of time, and allows for the recontribution of that distribution to a plan or IRA within 3 years. So instead of choosing income over 3 years, you can proactively elect to include all the income in 2020, which may make sense for some people. In effect, the law allows you to borrow up to $100,000 from your IRA or any combination of IRAs or qualified plans, and then repay the amount any time up to 3 years later with no federal income tax consequences, but it's got to be repaid. It is essentially a 3-year interest-free loan. One final note regarding the eligibility: to be eligible for the withdrawal and loan relief provided in the CARES Act, an individual must fall within one of the following categories. The individual, her spouse, or dependent is diagnosed with COVID-19, or the individual experiences adverse financial consequences as a result of COVID-19, as certified by the employee to the plan administrator. Now, it seems these provisions will be liberally interpreted, but remember, this act is meant to help you and prevent the economy from continuing to crash. The government wants you to stimulate the economy with your spending. On another note, the availability of funds from retirement plans presents a huge opportunity for those who are in need of cash, but it also creates plenty of confusion. However, make sure you navigate through all these choices, and also Make sure they don't compromise your long-term plans when making these decisions. Now, through December 31st, 2020, consider taking a loan from a qualified plan up to the lesser of $100,000 or 100% of the vested account balance. They doubled the allowable amount. It used to be the lesser of $50,000 or 50%. The due date for any repayment of the loan is delayed an additional year, normally 5 years. If the due date occurs between the date the act was enacted, March 27th, and December 31st, 2020. Financial planning opportunities here. Consider withdrawing money from your retirement accounts to pay expenses now that the 10% early withdrawal penalty is suspended. Now, you will still be paying taxes on those withdrawals, okay? You're just avoiding the 10% penalty. Consider if you want to spread the tax over 3 years, or if it is beneficial to pay it in 2020. Review your financial plan to see how much you might be able to withdraw without putting your retirement in jeopardy. Do you need to consider taking out a loan to meet expenses? And then lastly, do you have loan payments to a retirement account? You can delay those payments for up to a year. So if you took a loan from your 401k, you can delay those payments up to a year. All right, number 12, low interest, possibly forgivable loans for small businesses. And we're just going to touch on a few items here. The CARES Act created the Paycheck Protection Program, which provides funding for 100% federally guaranteed loans. And you can see the bullet points here of what they provide. So one way that you could use the CARES Act is to get a low interest, 4%, possibly a forgivable loan if you're a small business. The loan is intended to be used for payroll support, which includes paid sick or medical leave, employee salaries, mortgage payments, insurance payments, and debt obligations. There's a lot of information on this topic, so I'm only going to cover just a few items here. So if you look here, COVID-19 has devastated small businesses, which have been hit really hard from shutdowns and often have smaller margins and much less cash saved up. Congress knows that small businesses are important, as according to JP Morgan, they account for 44% of US GDP and employ 48% of US employees. In fact, it's estimated by Bloomberg that 25% of small businesses will be out of business by the end of the year. That's how much in trouble they are in. Because of this, Congress included the Paycheck Protection Program, also known as the PPP, in the CARES Act as a lifeline to small businesses. The PPP gave forgivable loans to small businesses and was funded with $349 billion. That money ran out fast, and now many small businesses have been left high and dry. So Congress approved an additional $310 billion for funds for that program. In addition to the new funding for hospitals, testing, and SBA disaster relief loans, the new package includes $310 billion for the PPP, with $250 billion refilling the program and $60 billion set aside specifically for smaller institutions like credit unions and community banks. That latter $60 billion is key in getting funds to smaller banks and lenders. According to the bill, $30 billion to institutions with between $10 billion and $50 billion in assets, and the other $30 billion to institutions with less than $10 billion in assets. So how much can you borrow? Loans can be made up to 2.5 times the borrower's average monthly payroll costs, but not to exceed $10 million. Financial planning opportunities if you're a small business. Does your small business qualify for the PPP or EIDL loan under expanded eligibility rules? Ask your bank if they are eligible to process and service these loans under the new rules. Also check how large of a loan may be available to you under the small business aid package. Also, if you're going to apply, do so ASAP, as these loans will be issued on a first come, first served basis. Also review your payroll and other expenses and create a plan around how best to apply money for any loan that you take out and whether the loan can be forgiven. Of course, review your financial plan with consideration as to how a loan will affect future expenses. And of course, should you rehire employees or restore wages before June 30th, 2020, to regain eligibility forgiveness. And that brings us to the last item, number 13. Payroll tax credit and deferral planning opportunities related to your business. Planning opportunities here. Check to see if your business is eligible for payroll tax credit in 2020. Have you had to implement major changes to your staff and payroll since March 13th? Make sure to consider these changes when evaluating the amount of your payroll tax credit. Check to see if you're eligible to defer your payroll taxes through the end of 2021 or 22. Check also to see how these provisions affect your eligibility for SBA loans as covered in the previous section. And then of course, talk to us as your financial advisor to create a plan moving forward. And now what we're going to do, we're going to recap 13 ways the stimulus packages can really help you. There's a lot included in these 3 stimulus packages that are worth trillions of dollars. I tried to survey the many opportunities that are available to you. So please consider thinking about these planning strategies and reach out to us for assistance. Consider maybe suspending your RMDs. Look into Roth conversions. Also look into tax loss harvesting if you have a stock account or a non-IRA account with investable assets in that account. Also take a look at your trust and estate planning options. Consider your charitable giving strategy, and then also look at potentially refinancing as well. So you might be wondering, what do I do now? Well, you can see here, this is a planning checklist, and this has also been emailed to you as well. We prepared this for you. You should have got it when you registered for the webinar. So if you have not received it for some reason, please make sure you reach out to our office and we'll be happy to email it to you, okay? It covers a lot of the issues that we've just discussed, asking you to think about these planning opportunities that apply to your life. So it's, it's all about cash flow and tax issues and long-term planning. These are all the things that we're thinking about for you, our clients. And it's really important to see this in the context of what's happening and how it's going to relate to your overall strategy. Of course, you should always check with a tax professional on any tax-related decisions, but tax planning is a really important part for our clients this year. And we have some new software programs that we're slowly beginning to implement for our clients that are really helping us take advantage of planning for you this year and looking at Roth conversions and charitable giving and things of that nature. So I'm going to review some highlights from these planning opportunities that you see in front of you. Do you have tight cash flow? All right, maybe re-examine budgets to reduce spending and consider extending due dates or altering payment schedules. Update plans as necessary. That's really the key. Did you receive a stimulus check? Married people with AGI under $198,000 should qualify for a direct check up to $2,400. Has your work been interrupted and could you qualify for unemployment benefits and family leave? You could be eligible for 10 days of sick leave and up to 50 days of family leave. Eligibility for unemployment benefits has been expanded, so many of these benefits apply even if you're self-employed. Are you a small business owner? Consider small business loans. As we discussed the PPP and the EIDL under the stimulus package, along with payroll tax deferral and payroll tax credit under certain conditions. Many of these benefits apply even if you're self-employed. Do you own a home subject to a mortgage or do you pay rent? Maybe consider relief from foreclosure or eviction or federal mortgages. Be careful, make sure you talk to your lender if you're going to do a forbearance so that you understand how the repayment options work. Can you receive student loan relief? Individuals with federal student loans, they get a 60-day waiver of interest and suspension of payments and can pause payments until September 30th, 2020. Are you planning to retire in the near future? Make sure you review your options, consider working maybe a little bit longer and or reduce your spending. Update your plans as necessary. Make sure you have a cash flow analysis so you have the right expectation going into retirement. You don't want any unpleasant surprises. Are you subject to an RMD in 2020? Consider whether you want to defer your required minimum distributions as 2020 RMDs are waived. You can also return an RMD already taken within 60 days of withdrawal up to July 15th. Do you need cash from your retirement accounts? Individuals who are financially impacted by COVID can pull up to $100,000 exempt from the 10% penalty and mandatory withholding and have 3 years to pay it back. That's the key though. You got to remember, you got to pay it back. Individuals can also take the lesser of a loan up to $100,000 or 100% of the vested balance. Do you have an updated emergency fund? You should have liquid funds to support living expenses in the event of an emergency. Do you have extra cash? Maybe take advantage of low valuations by investing or contributing to a traditional IRA, Roth, or an HSA if you qualify. And relevant to tax planning issues, have you considered a Roth conversion? Consider Roth conversions because account values may be depressed and taxes are not due until April 2021, and income is likely lower this year for you. Do you have any assets with a tax loss? Consider implementing a tax loss harvesting strategy. Also, do you want to delay filing the federal income tax or gift tax return? The IRS has offered an automatic extension for 2019 tax filings that were due on April 15th to July 15th, 2020. Also consider long-term planning issues. Do you possess an updated estate plan? Review the impact of any changes in asset values upon distribution of your assets. Are you leaving your trust as your contingent beneficiary? As a result of the SECURE Act, you may want to have that reviewed to make sure that your trust qualifies with a see-through provision. If you have a question on that, please reach out to us. That is a significant issue when it comes to the government eliminating the stretch IRA and requiring your children and or beneficiaries to limited a 10-year payout on your IRA assets. So many people are considering alternate strategies as a result of that, but as it relates to your estate planning, that should be reviewed if your trust is set up as your contingent beneficiary. Do you want to financially assist family members? Consider gifts and family loans or funding trusts when the annual rates are low. Do you plan to make charitable gifts? The CARES Act allows a new above-the-line charitable deduction of up to $300 when cash contributions are made to certain qualifying charities for 2020 and beyond, and allows for qualified contributions to be deducted up to 100% of your AGI. Okay, and lastly, consult with a financial advisor to determine the best path forward, and that's us. We can help you make sense of these challenging times and how they may apply to your unique circumstances. If you're not already a client at TL Financial Group, we encourage you to schedule a 20-minute phone conversation or consultation today. It's complimentary meeting. We offer when we do presentations, so there's no obligation, and of course, it's extremely confidential. It's a chance for us to answer any specific questions you may have about your situation. So let us know if you're interested by calling our office today. This concludes today's webinar. Thank you so much for attending. I hope you found this information informative, valuable to you. There will be a recording. If you'd like to send that recording out to a colleague or friend, we would greatly appreciate that. And of course, it's our most sincere privilege to serve you, not only just serve you regularly, but especially during these challenging times. So with that, have a great day, be safe and healthy, and we'll talk to you soon. Thank you.